Hello everybody, I hope you are all doing very well and welcome back to another cryptocurrency technical analysis, where in today's video I'm going to be covering the chart in front of you right here that I did post a little bit earlier on Twitter, which was met with lots of replies from people confused about the setup that I'm actually trading right now. So as promised, the video to clarify what I'm actually looking at here and the theory behind this trade. So I hope you enjoy the video, hope you take something beneficial from it. And yeah, let's go. Obviously a Monday. Most people do not like Mondays. I personally love Mondays because I have the stock market open. So you get see great volatility normally on a Monday stock market open. Okay, in England 2:30 p.m. So I had that today, which was actually a very green day in the stock market considering US oil was down. But obviously, you know, we got that volatility on the stock market, but cryptocurrency, you know, the polar opposite, where we've been moving in like a $15 range from the start of the morning to where we are now. You know, this really small range. Okay. From where, you know, let's take it from 9 a.m, you know, a 0.5% range over the last, we're talking about 8 hours, 0.4, 0.5%, you know, basically a no, you know, there's no scalping opportunities in there at all, which gave me time to, you know, look at setups for the stock market open. So yeah, I love Mondays and I'm now looking forward to going through this video. This is actually I had already started a video and I had to stop a few minutes through the video because I noticed I was like a ghost. You might say, Daniel, why were you like a ghost? And the answer was Viva Colombia. I was wearing the Colombian football top. And as you can see, I kind of look like a ghost floating through the screen. And I thought, wow, yeah, I need to end this video and change what I'm wearing. So that was the first time I was going to wear this in the stream because I have football tonight. So I have football practice and this is like my football practice top. So yeah, that's the backstory about that. But yeah, I love footballs and that's another reason why I love Monday, because I have football. But anyway, back to what you're all here for, the technical analysis and what's going on in this chart. Okay, so let's dissect this. Firstly, this is obviously, you know, a falling wedge which generally will break upwards. Okay, but there are a few factors to be looking at here. Okay, let's just go through, let's just remove this all from the chart and I'll cover like what I've got drew here totally. That would make sense, wouldn't it? So firstly, we can just start off with our Fibonacci, okay, and that's just the Fibonacci retracement from the bottom of this structure, okay, up to the top of this structure, okay, and now we have our perfectly looking Fibonacci lines that throughout this whole move have been, you know, just playing out absolutely perfectly. Just trading from these Fibonacci numbers honestly would have yielded very good profits, okay. So where we are now, okay, zooming in a little bit, obviously our most recent bounce from the 786, okay, obviously touching that 786 and breaking upwards, okay, forming a series of higher lows along the way. Obviously here a higher low, here a higher low, and what we've formed here a higher low, okay, so we are forming higher lows on a sort of a smaller term time frame, okay. And so that's obviously all stemming from the 786 touch, okay. So we are, you know, there's you know, potential of smaller long positions here off of higher lows, but yeah, it's not really looking too great on a smaller term time frame. There's little trades in here, okay. So this is when I zoom out and just play longer term time frames. Just look for swing positions, okay. I personally like volatility when I'm looking for scalp trades. I personally love volatility, and when you're seeing 0.5% moves, and yeah, you can't scalp off of that. You have to look for other coins, other opportunities. You don't always want to just be drew to Bitcoin, obviously. Okay, so you know that's why you want to create some sort of watch list and trade where there's volatility. Obviously, from my tweet earlier, I pointed out Zakia or ZIL, however you want to refer to it, which has obviously seen a nice movement up today and then hit the 886 Fibonacci level and saw a retracement of that move up down to the 382. So you know that was the you know, there's opportunities on other coins when Bitcoin's moving sideways, okay. As you may or may not know, Tron and its you know, its counterpart, that BT or BTT, with like 100% moves, absolutely crazy volatility. I was not trading that, by the way. I was not trading that, but yeah, there is obviously coins in this market that are getting big moves, but you know, I'm not so drawn to those massive moves, to be honest. I just like taking easy trades that give me capital and gain over time rather than 100% in a day. That's kind of crazy, but well done on anyone that, you know, bought in on that move. So yeah, back to Bitcoin, and let's draw out those trend lines that I had originally, and that was from our top here at 4,300, and the top was 4,130. Okay, from this top trend line, which I want to make red for resistance, we want to draw this down and get as much relevant touches as we can as a resistance line. Okay, and you can see here that we, can perfectly validate this line and having it like this. Okay, we've got one touch, two touches, a very small wick. Okay, we're talking about a few dollars wick above, and then another touch literally this morning, just before we broke down, obviously at around 9 a.m. we obviously had a breakdown just prior to that, just prior to 8 a.m. sorry, on this 4-hour candle. Zoom in here so you can all see. You can see here where it got another touch. So we've got one touches, two touches, a wick, three touches, four touches of this resistance trend line. So very valid, strong resistance trend line that we've got drew in here. Okay. And now we want to take our support line. Okay. So support line, which I want to make green. Okay, there's actually a few different ways that you can take this trend line. Okay, starting from the bottom and working back, you could obviously have a trend line like this, okay, which is totally valid. 1, 2, 3, 4 touches, and then you would just expand this down a little bit like that. Okay, so there's obviously a trend line here with, this is a really, really valid trend line, by the way. 1, 2, 3, 4, 5 touches, absolutely, valid to look at. But the other possibility that obviously I posted on Twitter was from our move back here. Okay. Which no, it wasn't. Yeah. So I just need to, then you just need to adjust this trend line slightly to get it looking a little bit like this. Okay, so one or the other. Basically, they are going to be more or less okay. Where you obviously have a touch, a few wicks down here. I would class this as a touch, within $2, a touch here and a touch here. This one, you obviously have wicks going through. So you have a wick here and you have a few wicks here, but no obvious closes below this trend line. So either or are fine. Okay, from here or from here, and each one is going to have a slightly different, we're talking about $10, $20, $30 of difference. So where my target is, it's not going to make too much difference where this trend line is drew from. Okay, so I'm just going to leave it here. So let me just adjust that really slightly. There we go. We're just going to leave that like this. Okay. And then on the other trend line that I had drew, this is a speculative trend line, and it was from the bottom here at 3,121, and just drawing up to get another touch here. And because this is speculative, let's just make this, smaller and lined like this. Just, I don't think this one is going to come into play so much, but I like to have it here just, just in case, basically. And what we'd be looking at there is basically a very, very tight range, which would be breaking by, say 4, 8, 12, 12, 16 hours most, if you want to look at that inside of this. I'm going to leave it here just for the video, because I do have it on my chart, but the way that I am looking at this, okay, so I obviously see really strong resistance at this, the golden pocket, which has now turned into resistance, which acted as support, very strongly here. We obviously had very strong support in this whole area, and this was for 17 days, okay, as you see here, 17 days, 16 hours, it held for support before it broke down. Because this was such a strong support, that support has now flipped into resistance. Okay, yes, there's a possibility that we end in a bar candle and we bar straight through this. Okay, that's obviously something that you have to be careful of in cryptocurrency, and that's why stop losses are so important. Because who's to say that it could obviously end in just a bar candle that goes straight through it. But I think that would probably end in a sell-off that comes back down, but you have to be aware that you could get a bar just to filter back down. Obviously the bulls would want a bar that then held this as support to move up. But yeah, that's just a possibility that I'm just throwing out just to make you aware. Again, this video contains zero financial advice. I am not a financial advisor. I am just a professional trader. So don't take this as financial advice. Just take it educationally, please. So yeah, what I am trading in here is I have already entered into short positions. Okay, I've already got one of my shorts filled, and I have my final shorts up to this 618, 3,560. So the same positions really that I was in from a few days ago. Still in those short positions to play this down to the 200 weekly moving average. Okay, the 200 weekly moving average, that sits at, let me show you all, moving up to the weekly chart. Just removing all of this, and then you can see here the 200 weekly moving average sitting at around 3,000, 3,000 now, about $3,007. Okay, 3,000. Let's just say 3,310. Okay, $3,310 is the 200 weekly moving average, just for reference, and that's what I'm playing as the first support level. Okay. So put everything back on the chart, remove that weekly moving average. Okay, so 3,310 is the 200 weekly moving average support. Okay, there is the possibility, I believe, of seeing a lower wick down, but because I'm in a short position, I would obviously love a lower wick down. That would be nice if we come down and tested a double bottom. But that 200 weekly moving average is where I'm taking in my first biggest percentage of profits. Okay, this 3,000. Let's just line it up on the chart. 3,310. Okay. So obviously I would, my perfect scenario would be come up and test out of here, get some sort of upper wick fake out, and then come back down. That would obviously work for me perfectly. But yeah, that's in the future. That's how I'm trading it right now. So I am short down to my first target being the 200 weekly moving average. Okay, should we break up from here, and obviously I get stopped out of this trade, then I look for the potential. Okay, just so you're aware of ways that I'm always planned for every scenario. And if we break up from here, then I am planned and ready to enter into a new trade. Obviously I will be stopped out of these short positions. Okay, so I take a loss on that the stop loss. If we move up, okay, my stop losses are higher than this, but if I get stopped out of this trade, then obviously I take a loss on this trade. I never get annoyed at taking a loss on a trade, and I just enter into a new position because I'm planned, ready for the scenario. If we break up from here, my plan is basically to be scalping on 1 minute time frames. I will 100% be scalping on a 1-3 minute time frame this move. Okay, and when I'm looking for this, I'm referring to my Bollinger Bands, my exponential moving averages, and also the order book. Okay, and I'll be seeing if we are coming back down to hold this as support and moving on, or whether it was literally a fake out, which I would hope for, to just come back down. Okay. And shout out to the Bollinger Bands who helped me, and shout out to John Bollinger, the man himself, who interacted with me today. We're moving on up in the world. We got the man himself who created the Bollinger Bands coming over to say hello there. So very nice of you, John. And also interaction today with eToro himself. So yeah, interacting with some big profiles today. eToro, the actual trading exchange, and John Bollinger coming in here and saying that was part of his aim. So yeah, nice to see that, John. Thank you. And yeah, so I think that's explained everything that I wanted to explain. Let me just think. That pretty much was everything for Bitcoin. Obviously, I've got different setups for other altcoins, but today I'm just going to be covering Bitcoin. Obviously, in this pattern, which generally will break up, the way that I'd be seeing this, okay, is moving more down one more time to touch around the bottom trend line / 300 weekly moving average. Okay, bottom trend line, I guess you could be looking at around 3,250, say 3,250. Before then we sort of break up here. Okay, that would be my first likely scenario, that we come down to a low of 3,250 and break up. Okay, obviously, don't get me wrong, I still remain really bearish. Okay, I still am playing this bearishly. Obviously, I'm in short positions. I don't catch falling knives, but I do play longs off of confirmation. Okay, I'm not some sort of gambler. I take every trade very well thought out. Okay, I spend a lot of my day thinking and planning out trades. Okay, obviously, if I spend an average day sort of looking at charts, say like 10 hours, I don't know, obviously I'm planned for every single scenario when it comes. And I know that the easiest thing in trading, and the way that you can, become successful is just, being ready for each scenario. And, you want I personally am never too scared to enter a trade. And if I get stopped out, then I don't care, because I've got another winning trade, up my sleeve. When you always want to take into account risk management and how you're actually trading that now. It's really, really important, risk management. And if you take a loss, it's just part of the game. It's just part of trading. Nobody ever wins 100% of their trades. And as I've said many times, if you are following somebody that never has, you know, admittedly taken a loss, or they try and come across that they win 100% of your trades, then you need to unfollow them, because it's not true. And trading, half of trading is taking losses, okay? And it's your risk management that makes you successful and makes you profitable, okay? You know, I know fellow millionaires that, you know, they are really successful traders, and their win rates, I actually know somebody that's, you know, really successful trader with a 30% win rate. Okay, he has a 30% win rate, but he is, you know, really financially well off, only through trading, and he has a 30% win rate because he's very strict on his risk management rules. Obviously, you shouldn't be aiming for such a low win rate. That was just an example. 30% is quite a low win rate, but you know, it just goes to show that with low win rates, you can be a profitable trader over time. Okay, and that's what you want to aim for: being profitable over time. You know, that's how you work your way towards financial freedom. Trading is not to become rich overnight. Trading is for the long term. Profits every single day, adding up and adding up and adding up. Okay, that's what you want to strive for. You don't want to be some sort of guy that just comes into this space looking for the, you know, the next moon ticket, so to speak. You know, trying to get rich overnight. You want to be in this for the long term. You want to put in the dedication to learning technical analysis. And I tell you now, I will help you the best I can through my videos. Through my videos. Sorry, it's because I have football tonight, and I am getting told to hurry up with this video because I have football practice. So I will be wrapping up this video a little bit. Otherwise, my friend is probably going to be like, we're going to be late. Well, he's already shouted at me saying I'm going to be late. You probably didn't hear him. But yeah, I'm getting told I need to hurry up. Yeah. And obviously I need to get into my clothes and get changed, because I'm still in, obviously, my pajama top now. I love making, you know, I always have people around my house. I'm one of these people that I love to have people come around my house. And, you know, I'm still at my computer trading, and they're just like downstairs. It's a bit strange, isn't it? But people just come around my house to take my food, I think. I don't know. But anyway, getting sidetracked there, I was going to go into an interesting story about how you should be trading, and how I will obviously, you know, put into my full commitment to helping you out. Okay. And I hope you can see that this is, you know, you'll see from the results yourselves. And I am going to wrap the video up now. I will try and get back to comments when I get back from football practice, which is going to be a few hours time. But yeah, I hope you've enjoyed this video, everybody. And yeah, thank you so much for joining me today. Honestly, I'm super happy, super pumped for all of the new stuff that's coming out. I think that I'm going to be releasing some really great content and helpful educational content for you all. I'm really pumped and excited for the journey ahead. So yeah, thank you, everybody, for joining me. Hope you've enjoyed this video. Hope you've enjoyed, you know, me explaining what I'm trading here. And yeah, let's see if we now break up. Obviously this pattern is an expected breakup pattern, but with no risk there's no reward. Okay, so just be careful. Obviously this isn't a general breakup pattern, but I am still in here for the short. Yeah, thank you, everybody, and yeah, catch you next time. Cheers.